Well, Warriors, let's have a great week. Alexander, Danny, how are you? Gorshi, Richard, John, how are you? Okay, let's take a look at what's happening here Monday morning. Hi, Hugo. So, left you Friday after the NFP with talking about this was the NFP and talked about Stel shorting yen 114 Friday. And I said, it's only for a reaction and that it looked neutral. I still think there's a chance that we head back towards this 1250 level for a good buy for one more shot up after this. Crude bounced back pretty good Friday. I'm still bearish. I don't think this was a low at 78. I think before it's over, it'll be, 72-ish, but it's a real chop. You could tell it's a bull market by the way it recovers, so it keeps recovering. I just don't think that this was a low in crude. Still think there's a chance that, eventually we head towards maybe the speed line at 72-ish. Okay, so tried to pop, sold this pop again. See if I'm right. It's going to have to trade over 83.50 to reverse back up. It was a 2-week reversal. Anas 78. Thank you, Forex Gal. Who's John? What do you mean, John?
Oh, John was asking a question about the NFP
okay.
compo. Good morning, Dale.
Okay. Hey, how are you, Ryan?
Yeah, not too bad, mate. You?
Pretty good, buddy. So the contest, someone's saying they should have won the contest anyway.
Yeah, I'll have a check on that, John.
Okay. So dollar weaker, really wasn't much of a breakout, never really did it. So to me, it looks like it's a pullback stage. I still don't think this is a major high in the dollar. And this 94.5 level still looks important. My preferred short, I know it's contrarian, would be to sell some type of fib or trace in Aussie. I know a lot of people love it, but I'm thinking maybe up around, the upper 74s, wrong over the 200-day moving average. This is going to be the preferred short. Missed some metals last week. I think that even if you miss the metals here last week, silver's acting a little better than gold today. That if I'm correct about after we get down here, there's one more shot up towards 117 and 116 and a half. That may create a pullback in precious metals to, buy a break. So we'll see what happens there. There is a, NASDAQ is beginning to, on a shorter term basis, express more weakness than the S&Ps. So, here's the 15-minute chart. We did have a nice divergence up here in NASDAQ Friday, whereas in the S&Ps, it was confirmed, which implies another high.
Did you get your Telsa puts on, Dale?
Did I get all my puts on?
Your Telsa puts, or Tesla puts on.
Oh, Tesla. You know what, Ryan? Yeah, I heard that Elon is tweeting whether or not he should sell some Tesla in December to avoid taxes. Did you hear that?
Yeah, he put a Twitter poll out saying he would abide by the result, and Twitter voted for him to sell 10%. So obviously it's down pre-market, and we're going to see what fun and games that happens.
Yeah, I kind of think anytime he does something like that, it's kind of like how the Chinese are, where they're saying they're selling stuff and they just want to take the price down to accumulate, or they're buying stuff and they want to distribute. I kind of think that, if he's trying to drive the stock down, it's because he wants to buy it. So what do you think?
Yeah, I think he's...
I mean, why telegraph something like that? And now the market's lower and he can't get as good of a sale off as he would have if he hadn't have done that.
Or he's already sold it.
Oh yeah,
He's
you're
buying it
right.
Back.
Yeah,
Now, how's that not manipulation? You know, moan about the
it's
Fed.
everywhere.
Yeah.
There used to be, hi guys, there used to be a time when
Stel.
people like that in these positions, they could only announce what they're doing via the filings, right? They can't just go out and do stuff. But anyway, you know, Elon Musk is on a planet of his own. He can do anything he wants.
It seems that way, doesn't it?
Yeah.
Yeah. So, you know, and wasn't it Peter Campbell talking about what he suspects Musk's doing by buying all these real short-term 1 week call options that force market makers to go out and buy stock because they're getting killed on taking the seller side of the options that are being bought because they have to make a market, and that Goldman lost 15 billion last week with that going on, I think, in the Hertz announcement, and then it's not an you know, the whole thing. It smells.
But he sold all his worldly possessions last year, apparently. If you remember that tweet, he put out a tweet one evening. I'm selling everything. I'm getting rid of all my possessions.
Yeah.
So I don't know how he's still holding stock anyway, but it's bonkers. I mean, how can you trade stuff like that?
Yeah, the SEC has no teeth. I thought that, you know, he made that comment a year ago about a merger or something, and you know, he wasn't supposed to do that. Anyway,
I think it's absolute crap. I mean, this is just allowing him to say, "Hey, look, I took a poll, and I'm now I'm going to sell a bunch of whatever I've got," and you know, just using the public as an excuse to you know, profit. You know.
Yeah.
So anyway.
Yeah, and Fed chairman, you know, the Fed governor's trading. I've never seen an era like this. So they better keep it up, because if it ever crashes, all these guys are going to be the scapegoats. So, and not really a scapegoat, probably deserve it. So
speaking of scapegoats, good morning, guys. Happy Monday to you.
Hey, Blake, how did it feel to sleep when you looked at your clock today?
I kept getting up early, and I
need a new biorhythm.
Yeah, I just laid there, and I'm like, no, sleep longer, and you know, I just tried, and you know, half an hour of sitting in my bed, and I'm like, you know, I might as well get up. I'm up now, so it's gonna take my body a little bit of time to get used to it, but it's
anyway,
nice.
You have it to look forward to anyway.
Yeah, exactly. And good morning, Ryan. So you know, I was going to ask you guys, well, first and foremost, you know, the dollar is I want to show you guys a little bit of the dollar weakness that we're seeing come through. We were just looking at the inverted head and shoulder pattern for the sterling here. You can see that on an hourly basis. We should, you know, rally up to about 136. So you should see some dollar weakness as a result, not necessarily because of the sterling per se, but I do think that the dollar looked, you know, a little vulnerable. The euro did, a hammer on Friday, and whoops, let's go to the daily chart. Hammer on Friday should lift the euro, you know, as long as stocks stay elevated, which I'm assuming they will. You know, it should take the euro a little higher from here. As I mentioned in the week ahead video, I tried playing the euro on the short side, you know, with the trend as we were pushing new lows. When it bounced up a little bit, I'm like, all right, I'll short a little bit, but then it just kind of grinded up through Friday, and then I just closed my short like somewhere around here, you know, and I closed all my I took a few dollar longs, and then I'm like, okay, well, I'll just be done with that, because I was in the middle of an interview, which, by the way, you guys should for those of you that are some old school traders, listen to the Dick Matthews interview. He had one of a trader from NatBank. Is it NatBank? Ryan,
NatWest.
Is that the name?
NatWest.
NatWest. Thank you. Thanks, Stel. And it's a really interesting interview with some guys that were trading through the ERM and on the dealing desk. Anyway, but I was on with them as I was, you know, closing up some stuff, and I'm like, yeah, it looks like the dollar might give some back, especially with stocks as strong as they are. And, you know, I wouldn't be surprised if the euro makes it back towards 116.50, but it is, you know, the one thing I also have to point out, a few things actually, is that we have some very extreme readings in stocks, you know, with the daily sentiment index registering around 93, both NASDAQ and the S&P. VIX is down at 12, so volatility can pick up at any moment. And the thing I wanted to ask you guys about is, you know, on Friday, Biden had Powell and what's her name? Brainerd. Visiting the White House. You know, there's a lot of speculation. One of the reasons why a couple people made note of this over the weekend. Polly posted an article an article from forget the hedge fund manager. Anyway, posted something in our chat room, and I read it on a couple places that a lot of people attribute the dollar weakness on Friday due to Brainerd being at the White House. A lot of people were thinking, "Oh crap, you know, here we got even a more dove than Powell possibly stepping in as the FOMC chair." You know, and Brainerd, she would definitely be more dovish. So people sold the dollar on Friday as a result, and I think that's possible. And really, if she is either the chair or vice chair, that is going to weigh on the dollar, because even if Powell gets reappointed, if Brainerd is the vice chair, she's probably going to be she's going to be in his ear. B, she could be groomed for the next Fed governor. So you could have like this, you know, dovish Fed for, I mean, you go from Bernanke to Yellen to Powell to Brainerd. I mean, God, you're talking, you know, 2 decades worth of almost 2 decades of very dovish Fed governors. Surprised the dollar isn't trading at 70 versus being where we're at 94. But anyway, that's some of the things that I'm thinking we have to be on the lookout for, is who's going to be Fed governor, and that should be announced. I'm thinking this week. It's very, very late into the year, and the Fed chair has to be affirmed. You know. So anyway, just
we'll know by the end of the month who the next Fed chair is. Blake, is that what you're saying?
We should know by the end of this month. Well, I mean,
okay.
I mean, who Biden selects now. Yeah. There is the confirmation process, but you know, if it's Powell, I mean, there's I don't no one expects any opposition there, and I doubt Brainerd as well. But you know, who knows what's, but knowing that those two were at the White House on Friday gives the market some confidence that, you know, things aren't going to be shaken up, and even if they are, it's going to be in a dovish way. So it's good for stocks. So, and that's, you know, if you're a dollar bull, which, you know, I have been, and I've been very, very constructive on the dollar, but we can't ignore the fact that we're at really key resistance. I mean, that's just the facts, right? And so, you know, if we reject here at 94.50 and we start heading lower from here, look, if you're a dollar bear, this is the place to establish your trades. This is it. Like right now, get long the euro and, you know, hope for the best. You know, and if the euro breaks below 115, that's your stop. You know, you've got your risk reward right now, like right here, right now, if you're a dollar bear, you know, and it depends where you sit. I'm more of a dollar bull until proven otherwise. And but I won't ignore the fact that Brainerd and Powell were at the White House on Friday. So anyway, I wanted to get your
Where's
thoughts.
your bull bear line, Blake, in the dollar?
94.70.
Okay, but I mean for you to change.
Oh, where I changed my tune. I would be below the 2 weeks ago. This flag right here. It's about 90. It wasn't 93.50, but we probed it. Remember when we probed it?
Took it out. Yeah.
That I figured that got a lot of people short right there. Because that was following, I can't remember what exact event that was following, but I remember it was maybe it was the ECB. It was the ECB. Now that I'm thinking about it, anyway, that right there said to me felt okay as long as we stay above. So let's just call it 93.25. You know, we get below 93.25, and that's going to be just another failure, and you know, probably opens the door to the end of the year. You know, somewhere back down towards the 200-day moving average. That would be my initial gut instinct, my gut feeling. So you know, just some food for thought. So Ryan, Stelios, what do you guys think here with the Fed chair nomination reappointment?
I thought we'd get the nominations, well, potentially by the end of the year, and then the decision in February.
Right. There was actually I forget who posted it. There's a really good timeline on the last nominations. This would be the last or the latest by far of any Fed governor being nominated, and you know, maybe Biden forgot about it. I'm joking. Bad joke. Anyway, I'm just saying that this would be the latest nomination of any, you know, of any Fed chair at this point in time. So of the last, like, you know, 6 or 7 appointments. So that's why everybody's like, crap, you know, why haven't we gotten it yet? And again, the speculation is rising because of who was at the White House on Friday. So anyway,
can I say something? Good morning.
No.
Okay, all right.
No.
Over to you.
Zip.
I just wanted to say, what's the difference between Bernanke, Yellen, Powell? What does it matter who's the next Fed chair? Unfortunately, we've come to this. What does it matter? It doesn't matter.
Is that a difference?
No, it doesn't. It doesn't matter because they're all doves. I mean,
yeah, exactly.
You know, it doesn't. Now, Powell had the opportunity to be a hawk, and
he was in the beginning, right? He was,
yeah. Many people were like, dude, this guy's going to shake it up. And then he succumbed to the constant beatings of, you know, Trump. And he, like a little, you know, he just got beat down like a dog, you know, he did. And in the submission.
But did that happen to him, or did he just get affected by everyone else, like the virus? You know, the virus situation.
Well, that too. I think that too. I mean, you.
But he flipped way before the virus. He flipped when he had a meeting with Bernanke and Yellen. They all held hands, saying "Kumbaya," because the last interest rate hiking made the market puked. And then next week he was in a meeting with those prior Fed chairmen and changed his mind.
Well, but again, they were cutting. If you remember, before the virus hit, they were cutting rates. You know, the economy wasn't doing so well. You know.
Yeah, I mean, the thing is I think he just is he was before the virus. He was constantly badgered about, you know, hey, get the market higher, you know, be more dovish, don't be so hawkish. And he was getting the beat down. Trump was, you know, talking smack about him publicly, you know, and never meeting with him. Yeah. You know how he did on social media. He would just, you know, just beat him up on social media like he did everybody. So, you know, and I think you can only, if you work for somebody, or you're getting this backlash from, you know, and this you have this earpiece in you all the time. I mean, it's got to wear you down. I think it wore him down, right? And then the virus came. So anyway,
if that's the excuse, Blake, good morning, by the way, and you have some dignity, and they don't let you do the work you're supposed to do, you quit.
Yeah, but
once you capitulate and you do what the any politician just forces you to do, you're part of the problem, right? And that's the problem, basically, that the main problem is it makes no difference, exactly as Stel says, it makes no difference who is in charge, simply because this is not anymore a monetary governor, in essence, position. It is a political position, unfortunately. That's how it's developed to be.
Yeah, and you're exactly right. So, you know, the fact of the matter is the market doesn't care. Going back to Stelios's original comment, the market does not care. If it's Powell or Brainerd, it won't care, and it'll just continue to rally. So, and based on the evidence that we got over the last week, that's who it's going to be, and that's going to keep the stock market elevated. And by the way, one of the byproducts of that was, if you guys didn't see, well, I know you guys did see, because you guys are, you know, balls to the wall long gold. But I mean, the thing is gold finally rallied on Friday. It's approaching some pretty key resistance here. I mean, this is, you know, the highs from August of 2020. Everybody knows that right here is the make or break level for gold. But I think the risk is that we're coming up for a test. This is also the 618 retracement. If you guys don't remember, it's also the 618 retracement of this last down move. So that's why it's so important. You know, if we break this downtrend line, if we have to break the 1835 level, we break 1835, I'll be a gold bull too. I mean, I'm just been very hesitant, you know, because it's just been underperforming. But the flip side is it's finally starting to, you know, show a little bit of,
still not convincing, but it's starting. Yes,
it's starting. Yeah, it is. And you know, but we could very easily be, you know, developing a wedge. We could have a nice little failure here, and we could do this, and then bearish wedge, you know, lower highs, consistent lows. You know, it's very, very, you know, who I mean, it's just, who knows? It's very sideways at the moment. And as you pointed out, Stelios, it's not very convincing at all. And what would you say, Ryan?
I was just saying it's all to play for as you look at that. But I agree with your sentiment. You know, if you're a dollar bear, this is maybe the time you look at things. I think what we've come through is a pretty big 2 weeks of central bank action. And I think what we're going to see now is the market's taking stock of that. We're going to see a bit of a period of reflection, a readjustment of expectations. You know, we're for the Fed, we're through the taper. Taper's done, dusted. Not going to give a monkeys about that unless something changes and they're forced to go backwards. Yeah. So I think what we're going to see, unfortunately, is probably another drop off into the end of the year of FX volatility. But we'll see the ranges develop. Remember how we were moaning about the tight ranges the last 4 or 5 months. We're going to probably see that developing again. So be careful that we don't get stuck trying to pick a trade and thinking it's going to run for 300 pips, because we may not be in that situation. But what I'm going to be watching for is watching these ranges develop. You know, are we going to see 112 in dollar yen? Maybe we see a 112, 113.50, 114 range. You know, the new 109, 111 sort of thing. Yeah. So for euro dollar, 115, maybe 117, cable 134 to 137, 138. And if we get those ranges, it's not going to be much fun. But if we sit either side of those, then we can pick up our pips off of those. Just playing.
Going to the dollar yen, and this is one thing that I've been, watching very carefully. I really am hoping for a move back down to 112 and change. Like this move down to here, the 112.50 to 112 level. I'm really looking forward to a move down there. But we're popping out of this triangle we've been developing, but we really have to break below 113.20. If you're on the daily analysis with us, like the analysis we do every single morning with ForexAnalytix with the community, I don't think there's a day in the last 2 weeks that I haven't written down 113.50 or 113.20, because we have just been really just every time we dip down here, it's a buying opportunity. But now, and as of Friday, and the reason why we tightened it up on Friday, because it was non-farm payroll. I haven't done the analysis yet. This morning, that'll be done in about an hour. We'll after this webinar, we go into the morning edge with the ForexAnalytix subscribers. But we'll be noting this 113.20 level, and if it breaks, it should open the door for a move down here, and that's pretty typical when you have gold rallying, to get a move higher in yen. That's that's a good, strong correlation, which has always been, you know, something that I've traded or at least looked at as it's developed. So I think we need to keep an eye on the dollar yen here. I think there's a risk that we can slip back to 112.50. And like I said, I'm a buyer there. So
there's a lot of people ready to buy down there.
Yeah.
It's coming to that point where you think there's too many people waiting to buy there. I might be bid at 111.50 just in case.
Yeah, and that's entirely possible too. I mean, the thing is when you have these ranges and you have the breakout of the ranges as you've been discussing, those, once you get out of a range, that range is going to be, you know, that's where buyers are at. I wouldn't mind being in like half a size position as we get to 112.50, and being able to establish another half below 112, just hoping stops get tripped. You know what I mean? And then I want to be down there buying, you know, right through here. But you have to have some flexibility. And a lot of times when I want to play a core position, like in this case would be long dollar yen, I would play a core position in a couple of different sizes, and, you know, some targeted levels that I'm looking for. And that would be in this case, that's what I do. You know what throws everything off kilter here though, and with the dollar just in general, is you guys have to really keep in mind that, you know, the equity markets are at very, very key resistance. And this is something I drew on the week ahead video, so I'm going to go ahead and delete that. But we are at the 161% extension, and that is the golden, you know, fib extension. We're up at, you know, trend line resistance. There is a risk that we don't get much higher than, you know, 47.25, you know, and if near term. And if stocks do turn lower from current levels, that is going to put a bid in the dollar. And that's something that, you know, we should all be paying attention to. So, guys, any final thoughts before Dale goes into his interview?
I just wanted to say one thing about, we've all heard Elon Musk doing a poll on whether he should sell, 20 billion of his stock or something. I just want to say, you know, Tesla has been the poster child of this rally, or at least one of the big names. And, you know, markets can get a little bit sentimental. And, you know, if we do see Tesla correcting, that's definitely going to drag a lot of things with it. I know it's only one stock, but like I said, it's, you know, it's more than a stock nowadays, you know, so many fanboys and what have you. So just something to keep an eye on. But anyway,
it's a great point, Stelios. It is more than just Tesla. It is a lot of the market. So
yeah, it was down 10% pre-market. Now it's only 4%. So I'm guessing it's going to end up green.
Yeah, more than likely. I mean,
look at that chart. I stuck a poll out. What do you reckon? Do you reckon it's going to close up or down?
I don't know, man. I really don't know.
I reckon it closes up. Like you.
I think it closes up. I mean, why wouldn't it? You know, I mean,
it'll dump at the open, and then all the fanboys will come in and support it.
Yeah,
and fangirls. We're not
and fangirls, fan people.
Everything. Yes, fan people. Yes.
All right, guys, and Dale, I want to say great start to a new week. I want to thank everybody for being part of the ForexAnalytix face experience and being part of this community. Don't forget, visit our webinar sponsors. You know, Forest Park FX. This is actually one of the things that I did over this last, you know, as I went and opened a trading account, because over the last several years, I couldn't really trade my own personal accounts. So I had, you know, I didn't have a PA, they call it, and I had to go and reestablish a new personal account after closing down the JP Morgan account. And I went to Forest Park so I can get these cashback rebates, and I actually get a check every month. Now I'm in the U.S. Steve, if I'm not mistaken, you get paid cash back in your account. Is that how it works?
That in PayPal? Yes, that is correct.
In PayPal, okay,
Blake, you get a check. Do you get faxes as well?
I know. It's well. The scary thing is I actually almost threw it away. My first one. Now I'm on the lookout for like these bank checks. What happens is I get all this mail, and 90 of it's junk. And my wife, she grabs all the mail and throws it on my desk. And I look at it, and, you know, I just end up throwing half of it. You know, it's all about like mortgage lending and blah, blah, blah. And, you know, and I almost threw away the first check. and I said, hey, that doesn't look like a normal junk mail. And I opened it, and I'm like, holy cow, that's no, I'm glad I didn't throw that one away. And then now I've been on the lookout for it. So anyway, make sure you visit Forest Park FX. We've been working with them since we really opened our doors, you know, maybe a few months after we opened our doors. Great company to work with. They're like the concierge of FX brokers. You know, you just tell them kind of how you trade, and they'll say, okay, well, this is going to be like a better option for you. But you can also contact Pepperstone Securities. We partnership with them. But if you want to contact Forest Park, you can go right down at the bottom, and it says live chat on Skype or email. It says brokers at ForexAnalytix, but that actually goes to Forest Park FX. So you can email them directly. So thanks to everybody for listening in and for tuning in every day. Dale, it's all yours. And thanks, Ryan, Stelio, Steve.
Cheers, guys.
Thank you.
Thank you,
Thanks,
team.
everybody. Thanks, Dale.
All right, let's have a great week, Stel, Ryan, Blake, and you could join the team in 45 minutes on the morning. Ed, Francis Hunt, welcome back to Face. It's great to have you back. Really appreciate that you want to address our community. You show some great technical work. How are you today, Francis? I'm trying to get you, trying to transfer you to becoming a panelist. If anyone's there, maybe they could help me out. I don't know why it's not working. There we go. Thank you. Hi, Francis. Welcome back to Face.
Very well, Dale. Thank you for the invite back. Delighted to be back with you.
It's great to have you back. You know, I don't invite people back unless I really believe that they have, you know, skills and ideas to share. And, you know, I've seen you on Twitter for years, but the presentation was great last time. So I'm very interested in what's on your radar now as we stare down at record highs in the market, and you know, we're getting some pretty good action in the gold market. And you can share your screen with that green button there, Francis.
Let me do that right away. Yes,
Okay.
thank you. Delighted to be back with you, and I'm actually fizzing with ideas at the moment, particularly in the traditional markets, which is my phrase for all things FX, indices, commodities, and a variety of other things. Let me get the first kickoff chart in play. It's almost, I don't know what you most want to hear about. I've got so much to tell you, and I know how much time have we got, Dale, so that I pace accordingly.
Another, say, 27 minutes.
Great. I'm going to go fast so that we can jam value in for your community, and that's the game. Real trade ideas that have decent to high probability of occurring with expansive rewards and tight risk. That's the game that I like to play. Welcome everybody. I've started off actually on silver. I typically say gold is the god market, so maybe I'll just do a short pivot to gold, and I'm going to maybe just switch off the eye. There's a lot of lines on there that's confusing. We're encouraged by metals, and you mentioned metals in your opening take. We're encouraged by metals, and we actually think that people have become so docile and cried wolf so many times now on resurgence of metals that they're actually going to possibly be surprised by what happens this time. So there can be people can be a little bit jaded. I think it was August last year, and in fact, let's just get that date spike right for the high. Yes, August last year. And you're more than a year and a number of months. People just think it's the thing that's not happening anymore. We see a strong move. I'll just slowly introduce some of the
who
lines
needs
back.
metals when you have crypto? They're more portable. You know, I mean, the millennium trade is crypto. And let me ask you this, Francis, do you think that the money flow into crypto has dampened the behavior, the bullish behavior in metals, that money flow being siphoned into crypto instead of gold and silver?
I think you mentioned generation. I think there's big, that's very generational, almost certainly. There's of the older generation that won't hear about cryptos, and there's of the young generation that's sort of in the okay boomer category. If you mention gold and silver, I like to bridge both. But I think you can't have a new category and I call this larger category the anti-fiat, because we're going to pivot to FX in a bit as well. I've got some very interesting thoughts on that. That I think will generate great trade ideas for your community. But I think the anti-fiat, which is where dollar is the king, it's the anti-fiat group, by being expanded by this new category, has got to have seen flow into that market cap that would have otherwise gone into the traditional gold silver. So for the gold and silver people to say it's had zero effect, I would see as a little bit foolhardy. But that doesn't mean that crypto is going to entirely eat the legacy metals dinner. And I'll remind people that it's tangible. You can hold it, you can stack it, you can have it in your grubby little mitts. And in this world where everything is tracked and traced, the blockchain is, in my essence, unless you're in privacy tokens, open source banking, because someone can have your wallet address and check how much money is going in there. There's certainly still some fallibility and things value to be had in that which you can touch. So I'm in the never mind the fastest horse, have a stable of horses, because even fast horses go lame sometimes and are the wrong tool. So that's my my soundbite for that.
I love it.
Let's go to silver because it's the higher beta. So this is recovery. I was going to just highlight on gold that actually you're in a broadening. These red and the pink line is a macro broadening out, which is typical of thrashing around after you've made a high and then squaring up. You might note that the big fat blue line along the bottom, which I can just demark again a couple of times, have been a hard floor. That is at the
flash
60
crash.
80.
That was a weird candle too, wasn't it?
Yes, indeed. It was a weird candle, and it got tested a couple of times. We actually had a double bottom on that one that reversed for the next move up, that again tested here and sold off. Then you had the flash crash. That was a significant date for many of the conspiracy theorists on gold and plunge protection and various other reasons. But we are now approaching this zone again. And typically the price, overall price structure has been what we call squaring up. So it's becoming more horizontalized, while previously it had this downward descent, if that makes essence. So the corrective period I think is over, and this is a squaring up. But let's go into the one that's a little sexier still, and held up a little bit better during that gold down arrow that I was highlighting, and that was the silver. And we'll show you the draws that we've got for you there. It's a little bit busy, so I'll just take the eye off first for everyone to recognize the chart before I scribble all over it. What structures we've been noticing are the following, the key events, and I'll draw them on overlay first, and then I'll let the eye come back on. That was, in essence, a falling wedge. We looked for the 3 impulse. We put a splitter in our wedges because you get these defining half moves that occur. Then you get this big bloated move that had the capitulation down, and you get a third and final. And in essence, this is when we expect to break out of the wedge, and that started to happen, the falling wedge. Overlaid on that, on a smaller time frame.
Could we get one more pullback to test the wedge line breakout?
It looks from the previous draw that I put up that you've already had a little bit of what I'd categorize as a return move, which I think is the question you're asking. In other words, that
didn't quite get down there.
That doesn't mean you don't come off again, but I'd already be thinking we're staircasing on higher lows now, where that is your last low, and that this is
I'm just talking my book because I didn't buy it the day of the Fed. All right, okay. Francis, so I'm hoping
you get another chance. Yes. No, I understand that sentiment. I'm going to drop you down.
Have you ever felt like that? You know, you're waiting. You don't act on the day, and then 2 days later, it's gotten away from you.
Well, it's typical of the metals market. It anesthetizes you into inactivity because it's been a lengthy, dull period. And you eventually become too assumptive of the ongoing nature of that. And then you get caught with your pants down. And this happens, I think, to all of us to varying degrees at moments in our trading. What I was just highlighting here with all these funny little draws that are coming to the end of this wedge is that there was a real buy base in this green box over here.
Yeah.
And then you had a reversal. So I'm going to take you down out of the daily into a lower time frame just to highlight that reversal a little bit. That is a classic inverted head and shoulder reversal there. So that's which I'm moving around being your left shoulder, that being your head, which was almost a final capitulation, which is very typical, and this being your right. And you can see, I show you where the interactions on the neckline were. You see the four crosses. First, when you break it, so I'll just choose another color so that makes sure everyone can see what I'm drawing. First, when you break it, then when you revisit it, then when coming up from under, you make it on a wick, which you did, and then when you trigger. So there's the first reversal, which performed 2 targets and another key round number at 24.75, and therefore you got the shooting star, which is tied in with that contact point I've given you, and there's your pullback that you missed, Dale. And it came all the way back, surprise, surprise, neckline at the $23, almost revisit, bit of a hammer, and you're back, you're heading back up again. Now, you are already in another, I'm going to drop a time frame so that this is evident, but these funny red draws are again another structure of reversal that's happening at a higher place, which has upside targets. And before I leave this time frame entirely, I want to highlight that you are also, I refer to this as nestled head and shoulders, in this case, inverted head and shoulders. And we actually have a lexicon that we've had to develop for HVF method, because there's many things in technical analysis that are not suitably defined to my satisfaction. So we've created our own language for it. But we refer to this very first one, the small one, this nestled one that I was just moving around the right shoulder on, as the monarch. In other words, it's at the top of the castle if it's a head and shoulder. It's the first sign on the smallest one, and then the others are bigger and incorporated. So in essence, this big line here is a larger macro head, where this over here, this structure over here is a left shoulder. And of course, we've kissed the same 24.70, just short of the $25, which is an interesting level. And then had the pullback again, where
the term monarch, because that formation is king.
It basically is the first at the highest point, yes, or the lowest if you're an inversion. So it's the top dog. Yeah, it's the top dog, and it's the smallest time frame. And it is the initial cascade that generates many of the other larger families. The top of the pyramid, where you get these broader shoulders, keep occurring as you head your way down after going staircasing up. So that's the phraseology we chose for that. And by the way, we'll show you some targets on that for the guys that are wondering. So what does that mean? What does that mean? Where we're going? Very interestingly, Dale, if you've been following silver, you'll know that the 28 has bedeviled us quite a lot as a level. So I'll just go back out for people with shorter memories, or who don't have this visual chart in their mindset. 28. So if we highlight, and I have that as a key level of significance, by the way, that fat blue line. So it stays on there. And by the way, even further, just for the relevance of that fat blue line, right the way back to the last peak. So everybody gets it. The base of that descending triangle, the key round number, that was the blow off and the end of the bull move many years ago. So we've been struggling to hold above that. So taking you back down, just so that, just like people to know where we are.
Great telescopic view there, Francis.
That's it. That's it. The people geolocated so that they know.
I love when my guests break out the telescope, and really gives, because everyone's using a microscope, right, Francis?
Well, you are spot on with your philosophy. The money's made in the sitting, Dale, on the big time frames. Get the big time frames right technically, and it's just so much easier to be successful trading. And you basically saying that very wisely there, and I 100% endorse that. I look at big time frame charts. If you have plenty more time, because things unfold slower, you are more prone to not make a silly impulsive move, and you get the major move right. You get forgiven a lot of errors on the way up. Get the major move wrong, it doesn't matter what you're seeing on a 15-minute time frame, you get much higher failure if you're trading against the macro. And I think that's what you're saying, and I 100% support that.
Yeah, just to be facetious, I enter on a tick chart and manage it from a monthly.
That's it. Yeah.
All right.
Keep moving that stop down. Give it more chance. Give it more room. Yeah, let it run.
Cancel if close, I call those.
Yeah. So
right,
the fascination with that is that I think you get challenged again at the 28 and you will rest again. But this green risk reward that we're showing, taking you once again back into the shorter time frame, because we're manufacturing a trade for our premium community as well. That was coinciding with the non-farm payrolls actually that we were doing. And I was explaining how guys could break into this trade on the smaller fractal, which which is again, we think reversing an inner cycle of higher highs, higher lows. And if I show you that smaller fractal that was bringing you into non-farm, maybe drop to the 2 hour, you can see what we've been looking. I'm drawing lots of reversal patterns on the chart now, and that's interesting on the various time frames. So this is one I would say certainly to watch. And even again, inside this particular correction here and there, you have our own mini monarch for the smaller move in here. So that was a left shoulder, that was a spike head, and that was a right shoulder that's already performed. So people are saying, well, we're looking a little bit benign now. Well, you've just done a target. You could pull back to here for all intents and purposes. In fact, in your case, you would probably be hoping so that you can get your trade on. And we were putting the guys in long here, and we were putting stops just below the right shoulder. So that's why the red zone is here and where the entry is. And you'll see we're always interested in max reward for risk. And you would be sitting with this trade. It's not going to be at 28 in a flick of a switch. But if I just take you back up so that you can once again see the big picture, that is the trade idea, taking you through the 28 level to those purple targets. In fact, they're probably a bit short there over there. And in terms of
do you think that this move in silver, say, you know, let's push it out in a lot of these scenarios, all these head and shoulders formations end up manifesting, and you know, we get to 28 and then we get to 38. Is your view that the gold silver ratio will continue to contract and head lower during this time frame? Because up until about, I don't know, 2 weeks ago, there was a little bit of a correction in the gold silver ratio, but it looks like that's terminated to me. Do you have a view on that?
Yes, indeed. In fact, you're finishing my sentences because you're taking me to the next place we were going to go, which is a very watched benchmark for me. And this is the gold silver ratio. And you're absolutely spot on as if we're talking metal trades, that this should be observed. We've been waiting and I've been moving these lines. So I've not just nailed it now. I thought this would happen earlier. And in fact, when we drew a channel, I was expecting it to break out the bottom, and in fact, it went out the top. It formed a broadening structure, and then formed a mini head and shoulder in here. So I'll just drop again over here and highlight that. Again, target made on the downside. That was a surge now for silver relative to gold. And this is a broadening. We call it a megaphone broaden on a bear pole, which we tend to see expect continuation from the downside. So the main direction in this time frame under review for which this megaphone exists is actually an ascent again. So it's almost like a flag. It just has a broadening structure in it, and you get a final capitulant pump that was taken all the way back down. And that break is significant for us of this, what we call this basing ascending grind line to the megaphone. So overall, we're seeing this revert downside, and we think this trumpet, this larger that we've drawn up here, that was broadening and going up, but thrashing more wildly, which is invariably discomfort with level. So when you start to thrash more, as you as an experienced trader will attest, the increase in volatility, they often don't say markets are going down. If you're listening to the Squawk Boys on CNBC, they're saying it's getting volatile out there. Well, it's usually the beginning of that process for a good smackdown to the downside.
One of our attendees, Francis, is asking if you use fibs on your chart.
We do use Fibonacci as an analysis tool. I use it in a very specific. Way. So the answer is yes, but not necessarily as every traditional technician would.
Okay.
So that's the answer. I'm very wary of your time, and I want to squeeze in so much value. So I'm going to leave precious metals there, and I'm going to tell you that we are calling weakness on the euro. So guys that want to be, we do a reasonable amount of free view. They can also see our YouTube channel. We're calling weakness on the euro. As a predominant American market, I'm certainly going to start with the big D as the other half of that. And we can have a look at this draw. We talk about complexity in head and shoulders, and this is also an M top. So it's almost like a double top as a head in a head and shoulder. and we are expecting reversal. Note you get your return move. It's very good to have these things. It's validation. It's not a problem. So there was the final right shoulder for us. Now, the best trade actually in terms of this doesn't involve the dollar. I think dollar is going to come on strong a little later. I think the taper talk might come a little bit early. It's time for Fed to get a bit of credibility back on that inflation narrative. So they might do something shock. I don't think yet. I think the Swiss franc is the biggest winner in this. You'll know, everyone will know that it's essentially landlocked to the euro mass zone. Is of the fiats, admittedly an ugly bunch, probably a semi-credible fiat currency, and not with.
So do you have like a 110 objective here off this formation in euro?
Yes. So just for the euro dollar trade, I am setting you up for a better one, by the way.
Okay.
I still think this is a worthwhile one. Had you taken it only at that neckline break, I would have taken early, but had you taken with a stop at the shoulder, you would be already down for this target for around a risk-reward ratio of 3. That doesn't tend to excite me particularly. So we optimize and we entered early, and I'll show you on the euro Swiss franc, which is our chosen trade that euro I entered on. But I'm just laying a foundation and marking it to dollar for our US audience as well there, so that guys can also position. Some of them may have European interests and might want to look after that. This is our Swiss franc call. And I think the Swiss franc is the main beneficiary to start. As I mentioned, dollar to finish hard coming. And that is coming because we also long the dollar against the yen. I heard the previous speaker, very interesting. Nice to hear Blake Morrow's comments there. But this is the RRR I'll get on this trade, and it's far more sexy for me. It's around 110. Which actually would be a new record. We have done triple digits once or twice. It doesn't happen every day. So we're famous for calling the euro Swiss franc. I was London based during that time. We called the short on a similar structure here, and the Swiss bank was already engaged. So many people say technical analysis doesn't work because the central bankers will just come in. They are just a big participant. And they were already engaged at this point. Not only was that target made, we had huge overperformance. You would have exited there. So I've drawn what we refer to as our overperformance slides. And that was your exit. Then they went to what some people refer to as peg, but I refer to as a floor because there was no upside distribution. And that was the big drama where Draghi said he'll do whatever it takes. And the Swiss, 3 weeks after saying the floor was central to their plan at 1.2, walked. And then a whole bunch of brokers, actually, one went bankrupt, Alpari, some of the names you might know, FXCM had to recapitalize. I mean, they were washed by this trade. Those were 2 short calls we had made that we were actively engaged on this. And we're now coming for number 3. I'm going to point out a couple
Francis, I've heard that a lot of brokers are raising margins on the Swiss right now. So they're a little bit concerned about maybe peg failure 2.0.
I think that's a classic sign of flushing retail out of the best trade by requiring them to put bigger margins. I can guarantee you, if you're on a big desk in a JP Morgan, you're not got any problems getting your short Swiss franc on. But the retail guys will be crowded out of the best parties. Get them on early, guys. They may still up and force you to trim size, but they may stop you from putting on the trade at all. So in extreme circumstances, they have stopped short sellers from putting shorts on. So it's like retail man bad, good for us. This is the structure that I've technically drawn for everybody here who's following. That essentially, this was I put a box in here and say this was the intervention crew. This is what effectively they did on something that needed to fall and correct. They put a box in there. And you ended up getting the outcome anyway. They could have let it all happen. So I've drawn this red line that's in thin red to show what might have happened had they not intervened. But essentially, you would have probably got the final low in the end anyway. They might have postponed it for a while at great cost to the Swiss citizenry, who had to stack a much lower worth currency at the expense of giving up on a good one. And this is a continuation pattern trade for us that we've been talking about quite a bit in essence. And it's flat bottomed, it's hanging heavy. It's actually not too complex. You see our drawn channel lines around this up leg. You have a small amount of meander within that. Since then, you're in the top room, then you're in the bottom room, but it's actually not very complex, and it tightens the channel's getting tighter. That shows the lowering volatility. That means real rest and comfort with this price behavior, staircasing down into a very tight channel swing up here. So in our worldview, the euro is compromised and is about to be exposed again. And if you aren't in early, you probably won't get in at all. And even if you are in early, they may up margins on you and you may have to reduce your sizes. So get them on quick. Yeah.
Here's a comment from one of our attendees, Francis. Don't remember seeing this guy before. Must have missed him. Awesome stuff.
Oh, that's very kind. Thank you to the gentleman. All the best.
I second that.
Oh, that's great news. Thank you, guys. Appreciate it. Always want to give value to people, real trade ideas with real R's for you to make. And that's the game at the end of the day. If you're making R's and you're only spending them when you're wrong, one at a time, it's the winning way to the game. By the way, going back to the macro on dollar, just to take you out, because I think the Swiss franc steals the headlines for a bit. I'm very concerned about the Asian currencies as well. That looks like a little flag for me on the USD JPY. We're seeing this also as a big continuation pattern for upside against the JPY. And probably my rainmaker $1 million trade, if you want to call it. We all have a Ferrari trade. We shouldn't have, but we think of that will be a real, and it's a super macro. The bigger the patterns, the bigger the gain. And it's already faked me in once, and I had to get out and eat red. This is the USD Korean one. We're known for calling this one. I'm going to put copyright on this trade as far as anyone can. The Asian crisis was very well signaled by the squeeze over here on the Korean one. I don't know what it is about Korea. I think all the Asian currencies are going to come in for problems, but this was an unbelievable super overperformance. That was target. This was all macro overperformance in Korea. Then you had what's the structure now, falling wedge into that. You got the crisis of 08, 09, which was, of course, the property related GFC. You got the huge run into dollar there, and then you've come back down. We are squeezing. We love this structure. Now, it did a little cheat on us. You remember the dollar initially got strong on the pandemic events, but then was the highest printing currency, and this was stamped on. And the dollar printed not only for their own needs, but I suspect for many offshore nations' needs for dollars. Which is part of the Triffin dilemma of being the world currency of denomination. But this fella is one we will see. It's not ready yet. It's not ready yet, but I've got alerts. I've got tripwires all around this thing. In the next 3 to 6, 9 months, I could see this working its way back towards here. If it triggers, it would run away. You won't even be able to get into the trade. Chasing a move like that, never mind one like this, where actually most of this is gap, is going to be absolutely unfeasible. If you're not in early, you've missed the bus. This is a super one. And by the way, it's 2,100. So we're talking about nigh on a 50% on an FX, which I think some of you won't need to make the case any harder than that to appreciate the scale of that. Never mind that previously you got overperformance to that, and you'll be paid to close your trade, and you'll be the only one being a buyer in an absolute panic nightmare scenario. So there's skippy stuff coming for world economies, without a doubt in my mind. And some of it could be taper tantrum and a rush into the dollar and a shortage of dollars. That could cause real...
We got one question about like your euro, when you're talking euro Swiss. Do you know fundamentally why the Swiss is going to strengthen? Do you have an answer for that?
Well, I think it's going to be as much about the euro weakening and Europeans generally, Germans, Italians, not altogether comfortable with dollar. They will have some dollars, they'll move some into dollars, but they'll prefer. Traditionally, Swiss. Old families of wealth have Swiss bank accounts. It's kind of like American folk might have a Delaware offshore corporation rather than go to Marshall Islands. It's close as comfort. They can drive there in a day. You know, I would suspect it's Europeans dumping euros for their high quality local friend. More than that. So of course, it's being an FX, it's a two-way swing. So by selling the euro, they're doing damage to the euro, and of course they're bidding up the Swissy when they do that. By the way,
thank you, Francis.
The insiders are very dominant in that space. Hildebrand, who was the SNB head on the last crash, wife had an FX trading account and was caught shorting the euro Swiss franc. If you believe it was his wife that was actually the trader, then I've got a bridge to sell you somewhere in nearby San Francisco. But yeah, so these guys, it might not just be corporations, it could be insiders all over the place.
Well, look at our Fed, what just came out from our Fed here in the US. So nothing surprises me anymore, Francis. There's so much manipulation and insider baseball going on that made Gordon Gekko look like a choir boy. Ivan, who was Ivan Boesky, or any of those old guys, Michael Milken, they were choir boys compared to what's going on now. So the best way for people to follow your top tier work, buddy, and follow you, get involved with you.
TheMarketSniper.com is our website. We run a premium community where we discuss trades like that. I'm going to leave you with four gifts. Also follow the YouTube channel. And if you're interested in crypto, the Crypto Sniper, if you're a traditional market man, FX and equities, the Market Sniper, just the single S. And the website is themarketsniper.com. 4 names for you as a parting gift as I sign off. GameStop, Sense, Overstock, BlackBerry. Yes, that old phone maker. So I'll flash the image just for super quick moments that you can all take a snapshot of it. These are for the equity guys going to be very, very interesting. We like that structure. You might see a mini USD Korean won in that. Overstock has already begun breaking, but you might get a little bit of a pullback. We see over 160 for that. Sense, a bit of a sort of Robin Hood stock taste to it. It's a bit like Palantir and meme stock. But also the potential's there and the money's to be made, and you've got real money management. Go and take it. Final one, that's Platinum Alert, by the way, which is my actually my favorite metal at the moment, because you can put more money into it and have less space. So watch Platinum. GameStop. There's something with this metaverse and Facebook. A gentleman by the name of Cohen went in there. I think this whole new world virtuality that to you and me, Dale, might feel like grandkids stories, not for us. Something with that. Watch GameStop. I'm seeing a huge 664. This could be a Tesla story in the gaming space. Watch the metaverse, virtual reality, everything that goes. It's on track. It's on theme. This guy's repositioning the stuff. The technical structure is here. It's an insane risk reward. That's it. I hope that was valuable. That's what I aim to do for my premium community.
I feel like I'm in an alternate reality.
We all are. That's right. Pass the Prozac, please, and a beer to wash it down with. Indeed.
Thank you, my trading warrior brother. Really appreciate it. Great as usual. Even better than the last one. So Francis Hunt, everyone. Some great. Wow. What great analysis on roids. Okay, right, Francis. Thank you very much, guys. You could hope you enjoyed it. It's on video. You may want to watch it again, and you could join the team in 13 minutes for the morning edge. See everyone for Turnaround Tuesday, and don't just count your pips on Euro Swiss and the Korean won. Count your blessings. Adios. See you tomorrow. You're very welcome. You're welcome, Gorka, Monica, Forex Gal, Alexander. All right, guys. See you later. Adios.